Assalamualaikum everyone. My name is Saibali. I am student BBA at Semester Fatehpur University of Engineering and Information Technology, Himalayan from Pakistan. This presentation is start by the investment analysis course instructor. My course instructor is Dr. Khalilur Rahman Wala. In this presentation, I will firstly explain arithmetic means and geometric means. Now we start the explanation and calculations. Question number one. During the past 5 years, you own two stocks that had the following annual rate of return. Um, Stock A and stock B. Now we calculate the arithmetic means of stock A and then calculation the stock B. Arithmetic means formula is H by P and divided by N. H by P is the sum of annual holding period yields. Stock A. H by P is 0.27 uh, is equal to sum sum stock A E from E12 to E16 and total number of years 5. H by P divided by N is equal to 0.054 arithmetic means. Stock B sum from F12 to F16 F12 to F16 press enter and total number of years 5 and H by P divided by 5 0.016 arithmetic means. Then we calculation the standard deviation of annual rate of return for each stock. ST and simply we calculation the STDEV from E12 to E16 from to column select stock A and then stock B STDEV from E12 to E16 and 0.0567 028 and, and then compute the geometric mean rate of return for each stock uh, by H by P by 1 divided by n minus 1 stock A and stock B. Firstly, we add the stock A plus 1 and stock B plus 1 and during past 5 years 1 to 5 years. Holding period returns. To select the column year 1 multiplied by year 2 multiplied by year 3 multiplied by year 4 multiplied by year 5 press enter 1.26160373 divided by 0.2 by 0.2 minus 1. Geometric mean is 0.04757371 and then same as it is calculation stock B H by P H by M holding period return year 1 multiplied by year 2 year 3 year 4 and year 5 and by 0.2 minus 1.014348 minus 1 is 0.014348. Arithmetic means stock A is more desirable. Arithmetic means stock A is more desirable as it is a higher expected rate of return stock B. By the standard deviation, stock B is more preferable as it is slower than stock B. By the geometric means, stock A is slightly better than its higher actual return the stock B. Question number 2. simply find the expected return of the XYZ stocks, and simply we perform the formula sum product rate of return and probability. uh, Calculate expected return of the XYZ stock. Probability multiplied by rate of return plus probability multiplied by rate of return, probability multiplied by rate of return, probability multiplied by rate of return press enter. Expected return of the stock XYZ is 0.075. Now explain the question number 3. Discuss the three components of investor required rate of return. First, in investor require rate of return, inflation premium, and risk premium. Investor required rate of return is influenced by the risk-free rate, inflation premium, and risk premium. Risk-free rate, this is the return for the different consumption linked to the long-term growth of the economy. Inflation premium, additional return of set losses purchasing power due to inflation, so often measured by the consumer price index. Risk premium, extra return demanded by the investor for taking on additional risk, considering factors like business risk, financial risk, like liquidity risk, and exchange rate. Question number 4. Give an example of a liquid investment and illegal liquid investment. Discuss why you consider each of them to be liquid or illiquid. Liquidity, liquid acid example, and illiquid acid examples. Liquidity. It's the ability to quickly buy or sell an investment without significantly affecting its price. And liquidity asset example, USA government treasury bills which can be traded quickly at a price close to the quoted price. Illiquid asset examples, specialized machine or remote real estate where finding buyer or seller may take time, and then selling price could deviate from expectations. And question number 5. You own equity in the alpha economy and you read in financial press that a bond offering has raised the firm debt to equity ratio from 35% to 55%. Discuss the effect of the change on the variability of the firm net income stream and other factor being constant. Discuss how the change would affect your rate of return. Debt usage, residual earning and required rate of return. Debt usage, increased debt lead to higher fixed interest payments, residual uh, earnings with higher fixed payments, net income becomes more variable. Require needed rate of return is changed as financial risk measured by the debt equity ratio increases due to more debt. Now, today my presentation topic investment analysis, and we explain question number 1, arithmetic means and geometric means. Question number standard deviations, and question number 2, expected return of XYZ stocks, and question number 3, uh, three factors components of investors, uh, and question number 4, examples of liquid investment and illiquid investments, and question number 5 is